back to Crypto Thomas Media. Aaron, Nicole and I talk about all things crypto and blockchain gaming. Today we're going to be speaking about a topic which is on the minds of many a crypto trader and which has very little content on YouTube. And that topic is, of course, crypto trading arbitrage. Make sure you stick around to the end because I'll be sharing some amazing arbitrage strategies with you. Also, think about smashing that YouTube like and subscribe button as it really helps with the YouTube algorithm, and of course you'll see more content from us. Now, before we start, let me define what arbitrage is for those who may not know. Arbitrage is the process of buying an asset at a lower price on one market and then selling it on another market for a higher price. In the world of crypto, this can be done by buying a coin on one exchange and then selling it on another exchange for a higher price. But I know what you're thinking, but wait, isn't that just taking advantage of market inefficiencies? And you're right, it does sound sketchy, but it's a completely legal and legitimate trading strategy. Plus, it's a great way to make some extra cash. Before diving into any arbitrage strategies, it's really important to make sure that you have signed up for as many exchanges as possible and have completed the necessary KYC or know your customer process. This will ensure that you have access to a wide range of coins and can take advantage of price discrepancies across different exchanges. When looking for exchanges to sign up for, it's important to look for ones that have good reputation, high trading volume, and low fees. Additionally, you'll want to make sure that the exchange has a user-friendly interface and offers a wide range of trading pairs. It's also worth noting that some exchanges may be more suited for specific arbitrage strategies, so be sure to do the research and find the exchange that best suits your needs. It's also worth paying attention to the withdrawal and deposit limits of that exchange. Some exchanges may have high deposit limits and low withdrawal limits, which can make it difficult to move your funds around and take advantage of arbitrage opportunities. On the other hand, some exchanges may have low deposit limits and high withdrawal fees, making it easier to move your funds around but may not be as liquid. Another important aspect to consider is the deposit and withdrawal speed of the exchange. Some exchanges may have a faster deposit and withdrawal speed, which can be hugely beneficial for arbitrage trading as it allows for faster trades. Lastly, it's important to keep in mind the regulations and restrictions of each exchange. Some exchanges may not be available in certain countries or may have certain restrictions on trading certain coins, so it's important to check the exchange's terms and conditions before signing up. With the right exchanges in your arsenal and a solid understanding of arbitrage trading strategies, you'll be well on your way to making some serious profits in the world of crypto arbitrage. So how do you go about finding these arbitrage opportunities? Well, there are a few different strategies that you can use. Firstly, there's the lazy man strategy, which involves setting up a bot that automatically scans different exchanges for price discrepancies and then executes trades for you. This is a great option for those that want to take advantage of arbitrage opportunities without hours of work of scouring different exchanges. However, it's important to note that there are risks involved with using bots, so make sure you do your research and only use a reputable bot. Next, there's a spread hunting strategy, which involves looking for coins with a larger spread. For those that don't know, the spread is a difference between the highest bid and the lowest ask. So what you're going to be looking for is those coins that have the largest spread on different exchanges. For example, if you see that coin X is selling for $100 on exchange A and $105 on exchange B, you could buy coin X on exchange A and then sell it on exchange B for a quick $5 profit. This strategy is great for those that like to keep things simple and don't want to have to deal with the complexity of a bot. Another great strategy is a triangular arbitrage strategy, which involves taking advantage of the different exchange rates between three different currencies. For example, if you see that one Bitcoin is worth $50,000 on exchange A, one ETH is worth $1,500 on exchange B, and one ETH is worth 0.03 Bitcoin on exchange C, you could buy one ETH on exchange B, convert it to Bitcoin on exchange C, and then sell it on exchange A for a profit. This strategy is a bit more complex and requires a lot more knowledge of the crypto markets, but it can also yield higher returns. And lastly, there is a statistical arbitrage strategy. You have no idea how many attempts that took me to say that, which uses statistical methods to identify profitable arbitrage opportunities between different exchanges. This strategy makes use of statistical models and machine learning algorithms to identify patterns and trends in prices. As you can imagine, it can be a bit more sophisticated than other methods and requires a knowledge of statistical and machine learning, which of course I do not have. Now I know what you're thinking, these strategies sound great and all, but what if I don't have the time or knowledge to execute them? Well, in that case, that's where the drunk man strategy comes in. This strategy involves going to a local bar, having a few drinks, and then checking the prices on your phone. The key to this strategy is to not get too drunk because you don't want to accidentally sell all your coins for pennies on the dollar. And if you're feeling bold, there's always a gambling man strategy. This strategy involves going to a casino, putting all your crypto on red or black, and then using your winnings to buy coins on one exchange and then selling them on another exchange for a profit. That strategy is definitely not for the faint of heart. And it's also worth noting that you're probably going to lose all of your crypto. So there you have it, folks, a few different strategies for crypto arbitrage. Remember, no strategy is foolproof and there are lots of risks involved. So make sure you do your research and only invest what you can afford to lose. And most importantly, always have fun with it. Remember to smash that like button and watch this video that YouTube recommends.